Hi everyone, Aaron Ninness from Denver, Colorado, your mortgage professional, coming to you once again with another episode of How Much Can I Afford? Today's topic is to answer the question, how long does this process take? A lot of folks are wondering out there, all this complicated, verbiage and process, how long is it really going to take to go out there and find a home? That's a wonderful question. Okay, so let's start at the beginning. Pre-qualification. To really find out if someone's pre-qualified usually takes no more than 48 hours. That involves you as a borrower filling out an application, which allows us as a lender to check credit and review kind of a 30,000-foot view of your qualifications. Then to go from pre-qualified to pre-approved really depends on the complexity of your individual file. Now, if someone sends in all their documentation that we request for the pre-approval process within 24 hours, and it's very simple, where they're just a W-2 employee on salary, they have their money in the bank, it could be pre-approved in, again, 24 hours. Very simple process. But the more complex it gets with self-employed people who have to provide additional documentation, additional tax returns, or for those complex situations where someone earns nothing but commission or bonus income, we might have to send it into an underwriter further for them to do some analysis and figure out exactly how that pre-approval is going to come together. So that's going to range anywhere from a couple days to a couple weeks. But once you have that pre-approval in hand, now you are really in line to go and find a property. How long it takes you to find a property is completely on the market and your tastes. If what you're looking for is specifically 1920 to 1930 row houses with 4 bedrooms, 3 baths, and over 2,000 square feet, your pool is probably a little limited in the Denver area. If you're more open to, I really just need a 3-bed, 2-bath, single-family home, area and flexible, you're going to have more to look at, right? But here's the deal. Once you go under contract, a standard closing time is 30 days. That is what really all professionals, if you asked them, would say is normal. On the long end is 45 days, but a lot of times sellers want to avoid 45-day closes because they might be looking for another home. Let's say it's someone not looking for another home, though. It's someone selling an investment property and the home is vacant. They're paying a mortgage in a lot of cases, and the sooner you close, the less they have to pay on that loan. Interest, taxes, all those items are accrued per diem. So as they hold on to this property, they're going to keep owing more money. Okay, so 30 days is a normal time. What's a quick close? Quick close would be 3 weeks. For example, my company, our minimum's 14 business days. We could do quicker if another lender maybe dropped the ball but already has the appraisal. We might be able to close faster, but that would be an extraordinary or extenuating circumstance as to why. 30 days is what your expectation is. After you close, we are wet funded state here. You might, as you do some research, find out different types of states. You'll see dry or wet. Wet just means that we need all the money at the time you are at closing, meaning once you have signed all the documents and we disperse the funds to put the loan against the property, pay off the other lien, you're a homeowner. You're done. There is no takesies, backsies on buying a home. Like refinancing a primary home, there are some dates of, a right to rescind within 3 business days where you can take it back, but that's not how it works on a purchase. So once you get to the closing table at the end of that contractual deadline, then you're absolutely an owner. Now, within the contract of that 30 days, there are a couple deadlines that you need to be aware of. One is going to be your inspection deadline. That's where you inspect the home and say, we don't like the condition. There's the appraisal deadline where I, as a lender, need to make sure the appraisal is done by a certain time. And then if the value doesn't come back where it needs to be, you have the right to object to that value. And then the final one is the loan conditions deadline. That's where I, as a lender, am telling everyone there in the contract of all parties, we have done everything to make sure that this borrower is approved so that we can finish up and go to closing. That's the last deadline where you could back out of the contract if you have a financial issue on getting home financing. And usually you can still get your earnest money back. But again, that's all dependent on the contract. So hopefully that gives you a much better idea of what the time frame is. Again, 30 days. If you feel like there's blemishes on your file or items you need to work on, keep in mind we can help you fix a lot of that, but you want to start that at least 90 days before you go under contract. So again, if this were August, you're looking to close in December, I'd suggest starting now on the process of finding out where you are. That way, if there are changes necessary to your credit, to what you have for down payment, that you have time to get those before you need to be out looking for the perfect home. As always, if you like what you're hearing, subscribe, give me a like, and we'll see you on another episode. Thanks for watching.